Hi everyone, I thought I'd provide you a brief overview of how to use this advanced market analysis tool. So this first sheet just contains all of
Someone is at the front door.
So this first sheet just contains all of the information that is driving the modeling. So this is just pasted in from Smith Travel Research. You don't really need to do anything here. You shouldn't adjust this in any way. Just go ahead and leave it. Okay, the second sheet is where we can really start performing some analysis, and here you should just leave these as 1 through 10 for the different time periods. That's pretty standard how we'll be using those in this class. But then over here you can change out the markets that you'd like to compare. So ideally you would put your market up at the top here. So let's say we're doing the Salt Lake City, Utah market. So Salt Lake City, Ogden, I can put in some comparable markets. So let's say I consider Denver and maybe Phoenix and we could look at Sacramento, maybe Reno, looks like Reno's not on here, so let's see. I doubt Boise would probably be on here either then. Maybe Seattle. Okay. And last off here, so Denver's already used, maybe Colorado Springs. Okay. So there we go. We can now see on a per annum basis how each of these markets performed, as well as what are their rankings. So Salt Lake City over the last year has had a 13.4% increase. If you go over the last 2 years, that's an annualized increase of 37.6%. So that's 37.6% each year to get to where we are now. So that's truly phenomenal. Why? Well, because if you go back 2 years, that's kind of at the depth of the pandemic, and so we've come up a long ways since then. So annualized return or change per annum for the last 3 years, 17.9%. If you go back 5 years, things were obviously a lot more stable then, and we've only grown 3.3% per year on average since then. Okay, per annum, that's an annualized return. Okay, so if you were to go back 5 years and increase whatever our RevPAR was at that time by 3.3% per year, you would arrive to where we are right now. Okay, we've got a graphical representation here. I'll show you that here in a minute on how that works. But we can also see 10 years and max as well. Now for each of these metrics, you can go and compare it to each of the comparable markets that we have listed here and see how this market performed. Okay, so useful information. A ranking of 1 out of 95 would be really great. So a lot of these you can see are much lower than that. Okay, I've updated this chart tool and I've changed it so that it will automatically update a lot of information in this chart. Before I had this just as an example for a market, but I've now made it a tool itself to where it'll update automatically. So you can come in here and set the market, only edit this cell should be the only thing you really have to change in the sheet, in addition to some labels that I'll go over here in just a minute. By changing this, all this information will update. So let's say, for instance, that we wanted to change it to San Diego. So we can come in here, change it to San Diego. Now you see all the figures have updated. Okay, let's go ahead and change it back to Salt Lake. Okay, now we've got all of our Salt Lake figures in here. What this does for us is it creates this chart, and actually even the data labels that are right here, these manual labels that I've just created through text box, these actually update as well. The only thing that doesn't update is the positioning of each of these in the chart. So you might need to adjust them around. It's quite likely you'll have to adjust them around when you run this again. So I'd already referred to how this chart measures performance on a per annum basis. So how it works is it takes the latest period that we have data for, and it goes back for each of these time periods. So green is 10 years, so it's going to go back and look at where we were in RevPAR 10 years ago. So that was right here. And then it's going to look at what percentage increase would have to happen every year for the past 10 years in order to arrive at where we are right now. And that comes out to a 4.72% increase. Okay, if you go back 5 years, things were doing better than they had been as of 5 years ago. It was before this kind of big lull prior to the pandemic. And things had grown pretty good, and they didn't really grow much after that, right? And then we had this big dip here, and really things haven't increased that much from 5 years ago. So you can see the annualized increase or increase per annum is only 3.31%. If you fast forward, start looking at pandemic era data, you can see we went down quite a bit, and therefore getting back up, it would have required some massive increases on a per annum basis. So that's why you see these two numbers are really quite substantial. All right, so per annum analysis, it's similar to how we think of securities like stocks and bonds. We evaluate those on a per annum basis as well. So just kind of a different way of looking at them. It allows you to easily compare different markets and see how they've performed across different time periods and across different scales and metrics. Okay, let's show you just how to update this. So let's say we're switching it to another market. Let's go look at our last team studied the Hawaii Kauai market. So let's go ahead and do that. So if we come up here, you can see all the data will automatically update. Now you'll notice that these values have actually updated as well. Okay, but then we also have the actual placement that's now not ideal, right? So this gray field, it's now the scale is completely different, right? So RevPAR up to like $300, up from like $100 before. So massive change, and that's made it so that these labels are no longer where they should be. So let's go ahead and reposition this one down here, put this one closer to that line, and we'll put this down here, and we can put the blue right here, and maybe we want to leave that right there. So it'd be a good idea to kind of reposition these somewhere where it makes sense. Maybe the blue one you could even put here. Gets a little tricky because it's right kind of over that green line. So some different options. But you will need to reposition them when you do this for your market. Okay, so that's the per annum chart. Really nice chart that you can put in your presentation. Next we have two different types of disruption analysis. So we talked about this in class, but a lot of times you'll have a disruption and you kind of want to measure and see the impact or how the market has performed ever since that disruption. So this chart here looks at supply, demand, and revenue. And we're looking at the San Diego market here. So you can see these are all relative to the starting point, which is the first clean month we have prior to whatever the disruptive event was. So here we're looking at February of 2020. So this is the month before COVID really set in. And we're measuring everything relative to 100, an index of 100. So you can see that demand dipped by a massive amount here because they got down to an indexed value of 36.13%. Now this is a moving or a running 12 figure, and how I know that is I can see that actually right here. We've got the R12, 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 right? So these are all running 12-month figures. So that's why it took so long to bottom out, is we essentially had to get down to the next February for that to fully bottom out. because then it included pandemic data from March of 2020 through February of 2021. Okay, so things bottom out here and then they start coming back up, and that's rooms revenue, the gray line. Rooms demand came down to this point, and the nice thing about having a chart like this is it's interactive and you can actually hover over it and see the exact dates and the exact values. So supply came down, kind of stayed low for a while and then recovered. Demand came way down and then recovered. Looks like it hasn't quite fully recovered. If it had, this would be above an index of 100. Okay, so 100 is 100% of what they were doing before. So you can see that supply has not yet come up to the amount it was prior to the pandemic. We're at 98% of what we were pre-pandemic. But then demand is even lower, 94.7%. Revenue, on the other hand, is quite a bit above. It's 120% of what it was pre-pandemic. So if demand or rooms sold is lower than prior to the pandemic, and revenue is quite a bit higher, 20% higher than the beginning of the pandemic, then the difference must be increases in rate. So I would expect ADR for this market to be up like 25% or something like that. Okay, so this is really nice because it allows you to look at multiple metrics, in this case 3 different metrics, on a single chart for the same market. So this is all San Diego, and we're comparing 3 different metrics. All these metrics happen to be related to one another, but it is really nice to be able to see the effect that they have. Maybe I want to see how this is affected, like supply and demand has affected occupancy. So I could come in here, for instance, and change it to occupancy as well. Okay, and that would be pretty interesting as well to see. And no surprise here, it does mirror closely demand, but not perfectly. Okay, and that is due to these changes in supply right here. Okay, let's switch that on back to revenue. And the last chart that we have here allows you to see multiple. It allows you to see multiple markets for a single metric. So here we have RevPAR selected. Okay, and once again we're gonna have to put in the last normal month. Okay, here I'm showing 84 months down here below. Okay, and it just shows you how different markets fared with the same disruption. So COVID impacted all of these different markets, and so it's kind of nice to be able to compare how different markets were affected and how they recovered. So here we've got Salt Lake City, Sacramento, San Diego, Denver, Seattle. Let's go ahead and throw in Phoenix as well. Okay. And now we can compare each of their recoveries with the pandemic. Okay. So here they all started at 100% of where they were prior to the pandemic, and we can see they all were tremendously impacted by the pandemic, and then they've all kind of started coming out. The date range, though, doesn't include everything. So let's go ahead and switch that to 2023 to get some more up-to-date data here. Okay, there we go. Looks like it's cut off some data here. So that's kind of interesting. Let's go ahead and just pull this down through. Oh, that does have 2023. Looks like the chart area just isn't quite right. So I'm going to click on the edge of this chart here and see if we can get it. There we go. We just need to pull this on down. Okay, perfect. Okay, so here is 100% right here. So this is where we would hope that they all would have recovered to by the end of the pandemic. Now, at this point, everyone is nearly up to 100%, including Seattle, which is kind of at the bottom here. But it took like this line here, let's see, that's Denver. It took them until just recently to pass 100%. So some other markets fared much better in the recovery. Okay, it looks like the green line here did the best. So green is Phoenix, and you can see Phoenix fully recovered as of March 2022, and they really kind of soared and have continued going up, plateauing a couple of times there. But they're 28% above where they were prior to the pandemic in RevPAR. Okay, this next line, this blue line, okay, that is San Diego. So San Diego is doing nicely. They're at 21.83% of where they were prior to the pandemic. So also a nice recovery. Guessing this is Salt Lake here. So Salt Lake has done pretty well as well. Okay, so it's really nice because you can look and see how much each market was affected by the pandemic, how far down they went, as well as how quickly it took them to recover. That would be at the point at which they crossed the 100, an index of 100 threshold. Okay, and then how they've done since then. So just looking at this, I would say really these three markets recovered nicely and have done well since the pandemic, whereas these three markets did not perform quite as well. Okay. All right. You could, of course, change the axes to make it maybe make a more sense. Maybe I want to do this by 12 months and I want to start it as of the 1st of 2020. Okay. And we can reformat things if we'd like to, like putting in all years here. Okay, we can increase some font sizes, do different things to make our charts look better. That's a bit much, maybe right like that. Okay, hope this has been helpful. If you have any questions, feel free to reach out to me. Have a wonderful day.